fund managers are bearish on the market, if they're choosing not to buy, right? Well, that means they're not really putting buying pressure out there in the market. So what happens as, over time, more and more of those fund managers flip to, let's call it, the bullish side, and more of them engage in the market and become buyers in the market? Well, it almost becomes a self-fulfilling prophecy of sending the market higher and higher and higher, because there's more and more buying pressure out there. When almost all the fund managers are bearish at a particular time, that means they're not buying, right? Because if they were bullish on the market, they would be buying. So if they're all bearish, that means they're not buying. So all it takes is a few of them to come in and be a little more bullish, and it sends buying pressure in the market, right? And when you get that more and more buying pressure, it can send stocks up, the entire market up, more and more and more. Now, also check out this. I thought this was a few interesting points to bring out, right? If we look at this, summer of 2007, basically sentiment was very, very positive. And what happened right after summer of 2007? The market topped in summer of 2007, and the next 2 to 2.5 years were awful in the market, right? The next 2 years were awful in the market. If we look at here, right, this was shortly before a fall 2018, which we had a bear market in the fall of 2018. It was nasty. I went through that market. It trashed me for a bit there. It was ugly, and for anybody that experienced that market, you know what I was speaking about, right? It was a nasty market. We got shredded, but look at sentiment right before that happened. Sentiment was amazing. Bullishness. And what did we get thrown in our face? An insane amount of selling pressure in the fall of 2018. It was ugly, okay? Check this out. I mean, this is about the most bullish we've ever seen the market in terms of sentiment. And what time period was that? That was early 2021, right? 2020. This is during the 2021 craze. We saw these numbers get about to the highest ever. And obviously, if we're thinking about recent times, it was probably one of the worst times to be a buyer of stocks in that early to mid 2021 time frame, right? So isn't this just a fascinating thing? And it almost goes to show you that you almost want to move against when these folks are so far on one side bullish or so far on one side bearish. You almost want to move completely contrarian to whatever side they're on. Because, I mean, when you just kind of look back at the data, you kind of start to find, oh my gosh, when these guys are all bullish, that's time to maybe sell or stop buying. And when all these guys are bearish, that's definitely, at least traditionally, it's been the time to buy. We'll see if it plays out again. It's played out so far. I can tell you that. Look at those numbers where we're at in October versus now. Absolutely fascinating, right? So, L stock, another new high here today, right? And this stock just continues to do well. I mean, some of you guys have taken advantage of some opportunities in the market the past 6 to 9 months. And some of you guys are going to have bought your ELF stock. I don't know what stock it is, okay? I don't know what stock you bought and have been buying, and hopefully you've been building out a great portfolio of 10, 15, 20 stocks. But you might have an ELF in your portfolio, like I do, right? And just remember, the story of ELF is a story of me seeing this company before other people saw this company and making profits and then taking my profits far too early. There was a time period when I owned nearly 10,000 shares. And so just make sure, whatever stocks you found that are your next ELF, don't be like me and take your profits way too soon and then be sitting on $1,000 and be like, or 1,000 shares and be like, why isn't this 10,000 shares right now? This should be close to $1 million position for me right now. But it's not, because I chose to take profits and profits and profits on a company that would just continue to execute better and better and better, and I shouldn't have done that, right? I want to share some perspective. Why has this been the most anticipated, expected recession, okay? It didn't have to be like this. It didn't have to be like this. It didn't have to be like this, okay? The bottom line is, the reason this has happened is because we chose not to call a recession. Because the bottom line is, in 2022, if you go to any business school, they will teach you what a recession is. And the number one thing they teach you is 2 straight quarters of negative GDP, right? And so we had an actual recession in 2022. But since the unemployment rate was so low, under 4%, they made the decision to basically not call a recession. So instead of just facing the fact and saying, gosh, we got a recession here, then they said, okay, it's not a recession because unemployment's low. And it's like, you got to understand, there's different ways you can have recessions. It's like, just because everybody's got a job, if people don't feel great about their money situation, right? If everybody's having to spend a fortune just to buy groceries, you can have a recession that way as well, right? And if you got negative GDP in consecutive quarters, everything else was lined up there. Look at investor sentiment. Look at not just investor sentiment, consumer sentiment. The Michigan's consumer sentiment was the lowest we've ever seen in the history of that sentiment. That happened in 2022 when we had what was actually should have been called a recession, and they chose not to call it a recession. So because they chose not to call it that, now everybody's still waiting for a recession. If they just called it that, then when we got back to, let's say, positive GDP, then we could have said, oh, we're climbing out of the recession, we're on the climb back, right? No different than we, coming out of 2009 and coming out of that recession. And as you started getting some quarters of positive growth, it was like, oh, we're coming out of the recession. So instead of having a narrative around we're coming out of the recession, they're still worried about we're going in the recession. You see that? It's a totally different change of mentality because we chose not to call something that it should have been. I released a video after the market closed on October 12th, 2022. And I said the stock market is set up for an epic rally. It was a 21-minute video, and I went into all these different points on why I believed the market was going to be set up for an epic rally. And obviously, we got the epic rally, right? But it was fascinating kind of reading back at the comments at that particular time. Because the comments were I would say a lot of them were very against what I believed in that situation and the data I laid out, okay? This person says, not yet. Got to see a leg down before the rally. Fed hasn't pivoted. More pain still coming. Jeremy probably went to Planet 13. Whatever he's smoking must be good, right? That was the approach. It was just like, that's how bearish everybody was, that they couldn't even take, me laying out all the data and saying why the market was set up for an epic rally. And sure enough, we got the epic rally. Obviously a lot of this type of stuff, just calling me a clown, just calling me names, stuff like that, right? And, to be honest, 2022 definitely changed my approach to YouTube forever. In kind of just my thoughts and process and everything when it comes to that, because I'll never forget the way I was treated in 2022. I will never forget that. And I'll never forget the way people treated me. And it was mostly from people under the age of 30. I'll just be honest. And so nowadays, I don't even make my videos with edits and all this fancy stuff, because at the end of the day, I'll never forget the way I was treated. Never. And I've always seen, especially with the older demographic that are more mature, have been around longer, experienced more markets, they know there's some people that are under the age of 30 that are really mature and have, great thoughts and those sorts of things. But what I found is we attracted a lot of people in the stock market under the age of 30, not mature, just, completely, those people that you just are just like, I don't even want to be associated with these sorts of folks, right? And that's who dove into the market in 2021. And then for any of us that had long positions in 2022 and got shredded, right, which I did and so didn't everybody that was basically long, we got treated like absolute crap. And, are those people even in the market nowadays? No, they're not in the market. They're long gone. But that's what happened, right? And so my approach always now is I create videos for more mature folks that are more experienced in the market. I'm not doing fancy edits. I'm not doing this. I'm not doing that, because I don't want to even attract those younger demographics. If those people are mature enough to watch a 20, 30-minute video of me going through a million charts and a million data points, then great. But that's not who I make my videos for.